Hey everybody, Bennett McDowell with TradersCoach.com back at you with this week's market opportunity. All right, so for this week, we've got a really nice trade. We did a lot of searching in the markets to try to find a really good trade based on today's volatility. So let's go ahead and take a look at it. Before we get into the actual trade, let me just quickly go over the risks involved in trading and talk a little bit about that, and then we'll get right to the charts. I think risk control is really important, and you really shouldn't trade unless you understand the risk, but also employ a risk control set of rules. And so at TradersCoach.com, I'm big on that, and we teach you how to do that. So if you're new here and you have no idea how to do risk control, go back into the more area, and we have some articles in there you can read. And you also may want to get something called the risk to reward calculator, which can help you quickly. It's a piece of software that can help you quickly determine your trade size and your risk to reward. You're going to see me use that today on our stock opportunity. Now, the other thing too is a lot of the ideas and suggestions that I talk about here, you really need to run them by your financial advisor, accountant, or attorney just to make sure these are suitable for you, because we don't know your personal situation. So any trading recommendations, market forecasts and things like that, always run that information by somebody who's familiar with your financial situation and also your association with risk and greed, okay? Everybody's a little different in that category. And also make sure you trade with money you can afford to risk. I think that's real important as well. When we look at charts, it's really important that you use the right trading tools. And this is where we come in with the applied reality trading system and all of our indicators. Because what they really do is they keep us objective in the markets by looking at momentum, fear and greed, and price activity. Really important. We also scan the markets using our scanners. Many of you have those and are using those. And then of course we use risk control as well. So really important to use all the tools as a system. So your risk control is in check, your scanning is in check, and your actual entries and exits are made off decisions based off the realities of the market. Now, when we look at charts, you're going to see me use these tools, or you're going to see some things on the chart that represent these tools as well. So you'll see them actually in use here. So our stock opportunity this week is Apache Corp, and that's stock symbol APA. And what we're looking at here is the daily chart. What we like about this chart is it's set up beautifully for a PTF trade. Now, what do we mean by that? Well, we have an indicator down here called the PTF right here. And the PTF has a 75% accuracy rate, and that's quite good. So the way you use this is that when you have a green PTF, find the highest price in that green area, and that's this price bar right here. So that becomes your target range, and in this case, that's $17.88. Now we want you to put your stop at $12.01. $12.01. The close on Friday was $13.77. So as a general rule, what we like to tell you to do is try to get in to this trade on Monday as long as prices are within 10% of Friday's close. Now we've done the risk to reward numbers for you, and this is a great trade in terms of risk to reward, because if you notice on the risk to reward calculator here on the right by TradersCoach.com, your risk to reward ratio is 2.32 in your favor. So that's your edge. And we don't like to recommend any trades unless the risk to reward is 2 or above. So this fits that parameter beautiful. So this is a nice looking trade. Now one more thing to talk about this is we also like using options on trades like this. And we recommend the July 2020 calls, a simple option play is to buy the calls with a strike price of $13.50. Now, we want you to be careful with risk control. So a really cool and simple way to do that with options is just don't buy any more than 2% of your brokerage account value. So in other words, if you have a $50,000 account and you want to do an option play on this, 2% of $50,000 is $1,000. So just don't buy any more than $1,000 worth of a call. And then that's the most you could possibly lose even if the option expires worthless. All right, so that's a good way of doing it. Now we're picking a July expiration date on this because that's going to give you enough time for this particular trade to do what we think it's going to do. So it looks really good. And we wish you good luck. Use risk control. And if you buy the underlying asset, again, calculate your trade size. And on a $50,000 account, your proper trade size with these parameters is about 565 shares with a protective stop loss exit at $12.01. All right, so that's it for this week. Good luck. We'll be back at you next week with next week's trade opportunity. Thanks for tuning in.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It's because of our years of experience, attention to detail, and exceptional customer service that we're the right choice. Call us today.